Hi there, and welcome back to another episode of Let's Talk Real Estate Investing. My guest today is David Richter of the Simple CFO. David is an active real estate investor who's been essential in closing over 850 deals over the last years. While growing and building a real estate business from 5 deals a month to 25 deals a month, he realized that as much money was coming in was also going out the door every month. By having the opportunity of being in every seat in the business, he found his calling, though, in the company's finance seat to help businesses see where their money really went. He's helped real estate investors and real estate investing companies completely turn their business around from going out of business to building cash reserves by using the Profit First cash flow system. This led him to write his first book, Profit First for Real Estate Investors. This book is a derivative of the original Profit First by Mike Michalowicz and is tailored specifically for real estate investors. His goal is to completely transform the real estate industry when it comes to how real estate investors view their finances, and he wants to bring investors true financial clarity and freedom and help them stop living from deal to deal. Well, welcome to the show, David.
Thank you for having me, Sharon.
Boy, that's a huge promise. And I'm sure that's one that everyone is interested in because as I look around, pretty much everybody's living from deal to deal.
Right. Yeah. And I see that all the time. So that's why I fell in love with this system after being a real estate investor and just didn't want to see people doing that anymore.
I want to go back to your beginnings. So, as I said, I was so excited to hear about this book because I'm a big Mike Michalowicz fan. But I want to start out by taking you back and have you tell everyone how you got started in real estate investing and, back to your beginnings.
Yeah. So I had a very good friend in college who gave me a book. He gave me the book, Rich Dad, Poor Dad. So that's what got me started with everything, like most people in real estate investing. And I read that book and I went out and wanted to take action because I'm a big reader and I'm like, I got to do something with this knowledge now. So I went out, bought my first house and flipped it and actually, got it all nice, rented it for a little bit, then actually lived in it for a while. And then after we moved, I lease optioned it. So I lease optioned the property, had a tenant who paid early, and then he cashed me out 6 months later. And I'm like, wow, this is nice. Like, we got to keep doing this. So had already made money throughout the life of that property and then sold it. And that was really cool. So then I started working with a real estate company because I wanted to see how a real estate, company operates. So It was a company that was doing about 5 deals a month, wholesale deals. Then from there, we grew it and the team, we grew it to about 25 or 30 deals a month between fix and flip, wholesale, turnkeys, lease options, rentals, anything that you could think of as an exit strategy, seller finance. Then I got to sit in every seat too. Like during my tenure there, I was kind of like a utility man. So acquisitions, fix it. Okay. Dispositions, project management, property management, transaction coordination, the finance seat. So I got a huge exposure to small business, how it runs, and how to build a real estate investing company. And that's where I got to my love for real estate and started building a portfolio on the side as well too, so I could start building wealth and, a portfolio for myself. So that's where I got the hands-on education. That's what really kickstarted my real estate investing career.
That is so interesting because I think people totally downplay the going to work for somebody and learning the business part. You could have done that all yourself. And a lot of people start out the way they start doing a deal here and a deal there. And that's actually the way I started because I had another business. So real estate for the first 10 years was a part-time business for me. And it served me well. I learned the business, but I had another very demanding business. And there comes a day when you got to choose, you got to pick your lane. And I wish I had the opportunity to go to work for someone like that. And I always say too, like you, I've done so many of the real estate investing strategies. I started out as fix and flip, as buy and hold. Then I became an accidental wholesaler in 2008. And that gives you, first of all, having all those exit strategies and learning creative finance along the way, that gives you so many more opportunities. But you just get this vast amount of knowledge And as I look back on the way I did it, the way you did it is such a much faster way to get to where you are. Don't you agree?
I definitely agree. It's almost like reading a book. You are taking someone's experience and you're boiling it down, and like you get to see, oh, this was a great experience because we got to see it hands on. So it was like better than reading a book, because now it's like we're in the trenches together getting to build that. And the way I got started was 8 months before I officially worked there, I said to this guy, like, I'll work nights, weekends, like, can I just learn while I'm doing this, provide value to him, to see if like I wanted to, like if he would want me to join the team or if they had a spot. So I did that for like 8 months while I was still working another job,
Wow.
then jumped in with them and then just started soaking it all up. So it was just a very good experience, try to give the value to them, and then being able to see, like if I would have done it myself, it would, like you said, it would have taken a lot longer to go to even that first 5 deals a month, like just getting to there and then going from 5 to 25 over the next couple of years, like building that team and everything. It was an incredible experience.
Yeah, that was luck. Now, to be clear, were you getting paid on the early years, or were you just you're donating your time?
At the first 8 months was I didn't get paid anything. I was just learning. I was in the business, and then I was getting paid, for the, my tenure there while I was actually there. But that's where I learned a lot of the exit strategies and what I was doing too.
That is such a gold nugget, because I know I volunteered with people to learn something before, just to be part of what they were doing.
Yep.
And it is probably some of the most valuable education you'll ever get, because if you think about what you spend on college, you're dumping money in, you're learning, to go work for somebody that can cut years off your learning curve. Even if you're not getting paid, you're not paying them to learn. It is such a huge opportunity.
It is. It really is. And it's, as long as you can craft it as a win-win for them. Like, is there something in the business that I could either learn or that I have a skill with that I could bring to this and then help you? Yeah. I mean, that's what I always try, leading with value. How can I provide that value to them? And then what can I learn as well too? Because especially back then, it was like just trying to consume everything, especially hands-on.
Yeah, no, it's like, it's almost overwhelming, isn't it?
Yes, it can be.
So before we move on and talk about what we actually came to talk about, I'm a marketing nerd, so I want to talk about marketing a little bit. So when in your business, there's a very big difference between generating leads for 5 deals a month and 25 deals. So talk a little bit about marketing for the folks, because right now you're marketing a book, but you've also marketed properties. Tell me about how you did that and some of the strategies you used.
So back then when I first started, there were deals on HUD and, the MLS, and like they were all over the place. So for the first, I would say 2.5 years, we put in 3,000 offers a week, I think, on HUD, gosh, because we built a team of virtual assistants and a dedicated realtor that had a HUD, had the HUD NAIDS number or whatnot, that they could put in the actual bids. So we would have virtual assistants scrub the ones that were like, these are the ones we want to bid on. Then we would bid on each property every day, and raise our bids every day too. So we were bidding on lots of different properties every single day in our in that market that we were in. And so that was one of the big ways up front that we were doing it. We kind of like systematize that. Then it got harder to buy the foreclosed properties, because then the bull market came around again and everyone is a real estate investor and got more competitive. That's when we started going into direct mail and we also did some other things too, like sheriff sale. Like we'd actually go to sheriff sales and pick up 2 to 3 houses almost a week just from there in some of the counties we were in. We would go to tax sales, we would mail the tax delinquent list. We would mail, like some of these things like that. So we were doing a bunch of the just traditional marketing channels after that. And, we're seeing success from, getting leads that way too.
So yeah, this is a point I continually like to hammer home to people. The methods that worked 25 years ago, people call them the old style marketing. They still work today. They still bring you deals. And then you can add on the new shiny objects. Yeah. But the tried and true always works. So, well, thank you for that. So I'm glad to hear that was your experience too.
Yeah, it was.
Now, you said you looked at money coming in and money going out. And I think about time and money. Whether it's money, people tend to spend whatever you've got, most people tend to spend it. Whether it's time, think about vacation, how much we can get done the 3 days before vacation. And
Right.
yes, we can take that same amount of work and spread it out for 2 weeks or 2 months.
Oh yeah.
So people, it's common for them to find themselves in this situation. So let's talk about that just a little bit. First, the first thing I think is recognizing you have a problem.
Yeah. That is the biggest thing. Was one of the last seats I sat in that company was the finance seat, which my background, like I run a fractional CFO company now, but I'm not a CPA, didn't go to school for this or anything. Like my training was being a real estate investor, sitting in that finance seat and like learning it, like in the trenches of asking my CPA questions and like just getting the school of hard knocks.
Yeah.
And then it dawned on me, like once I was able to analyze the numbers, then I could actually see from once we were marketing the property, what we just talked about, how that turns into a deal and how that money flows into the business and what that really means to the bottom line, like how we actually got to the bottom line. So to me, that was super eye-opening, being able to see the money flow through the company.
Yeah.
And that's where I really got the eyes open of, we were doing 25, 30 deals a month, making 6, sometimes 7-figure months.
Wow.
And we were spending that much too. And it's like, why are we doing this? Like we already had the crash 2007 and 8. Like I don't want us to go down again just because we're scaling ourselves out of business. So that to me was super eye-opening, because now I could see the problems as they came up. I've got a good mentor and friend who says, knowing your numbers helps you uncover the real problems, because we as entrepreneurs are problem solvers, but we don't know always which problems to solve in the business. What is that next problem? What are we not seeing? What is that? And me seeing those numbers was like, oh, shoot, now I know, like if something's broken in this department, or if something's broken on this side of the business, or, like we've got too much overhead here, or don't have enough over here in marketing and we got to put some more dollars over here. So that to me was super eye-opening and helps uncover the problems inside the business and being able to actually face those problems and say, what are we going to do about it?
Yeah, that is huge. I have a friend who took a look at her marketing a few years back. She was spending a huge amount of money on marketing. She was an engineer by trade, a Navy gal, and she sat down and looked at, where did my leads come from? I spent this big amount of money on direct mail, and she said, wait a minute, over 50% of my leads came from these other sources. Then next year she cut back on her direct mail, amped up what was working over here, but she wouldn't have known that if she didn't do that analysis. And I think people, they get so caught up in the day-to-day. They get caught up, and data tells the story every time. And when I talk to people about deals, I said, the numbers don't lie. It's either a deal or it's not a deal.
Yes.
You can't do this funny eraser math where, well, maybe this and maybe that. It is what it is. But recognizing that and taking a hard look at finances, because I think most people think lack of money is the root of the problem, when that's not always the case.
No, it's really not. And I love that you brought that up, like that analyzation of what she was doing, because how many investors do we know that do that? We're just, throwing money away. It's just throwing money away. And it's like, this is what you're working to do, like to get out of the rat race, but you're perpetuating your rat race by not having just some of these just core things to be able to do that, which I understand too. Like you said, we didn't go to college for this, or like they don't teach basic money management skills, not just for personal finances, like balancing a checkbook, but what about balancing the business checkbook, and like on a grander scale. So that's where it's very, very discouraging, I know, for entrepreneurs, where it's like, why aren't we seeing the returns? Or why don't I ever have money in my account?
Why am I broke, but I made all this money?
Exactly. Yeah.
So you talk about being in every seat of the business, and boy, can I identify with that one. And that's where I think most people start and they stay there. That's the problem. They stay there. And you said something about scaling yourself out of business. And the other side of the coin is, but if you stay there and you do all the jobs, you can't scale. So it is a catch-22. So When you had your own business, you were in a different position. You already had all this experience. So if we're talking about a first time investor and they need to be really shot out of a cannon out of that seat and add an employer to, what was the first thing that you would say that they should change? What is the propeller in all of this?
Well, doing the things that they don't want to do or don't like to do, but that bring a big return.
Right.
So like the numbers, like getting a bookkeeper in there when you first start out, you don't want to be doing these numbers, but it has to be done.
Yeah.
And what your numbers show you are incredible, like, so that way you can make better decisions. So you're not pulling your hair out, especially as you grow. Scaling, you have to be very conscientious of where your money's going. So if you're like, well, I don't like doing this, and this, and I'll just hire these 3 positions, and then you're like, where's all the money going? Well, it's probably going right out the door, like to overhead and to paying the expenses. So you need to know that's one of the very first things, like getting, especially if it's something like that that could give a high dollar return on your time, just to be able to analyze it. Then getting an assistant right away, like just to document what you're doing, if that's all that they do, like to record your phone calls, to record the calls that you have internally, like whatever it is, getting a virtual assistant or an actual assistant in your office, and just like any conversations you have, recording it via Zoom or recording it somehow. So that way you can start building the framework, even if it's just a hodgepodge right now, you're starting to build the framework to be able to scale. So those would be kind of like the first couple things I'd be thinking about. And then what do you want to replace yourself? Because if you are the best acquisitions person, you might not get out of acquisitions for a little bit if that's your highest and best use, until it's time for you to take on the CEO hat fully, because you have acquisitions people, dispositions people, you've got the property management, or you've got those other seats. Because eventually, if you want to get to that position where you're not in the day-to-day and you are the CEO, then it's all about culture, people, and numbers. That's what you're doing all the time as a CEO. So, but it's working yourself there. So if you're just starting out, get those things off your plate. If it's the bookkeeping you don't like, hire that first. If it's not, if it's anything else, get an assistant, start recording so you can start bringing on those other positions that you might need.
Yeah. And I think having an assistant, people are reluctant to do that, but you need to, like you said, start offloading some things, and you really need to nail down what is your core genius. Some things like, for me, that's one thing I cannot really get rid of is me in the business. I always tell people marketing is how you get deals, but branding is why they choose you. So you've got to be the face of your business. So in general, you and I are going to be creating our own content that involves our face. That's something you can't get rid of, but you can get rid of a lot of the other parts of that. Now, for someone like you pointed out, the acquisition specialist, I know people, I always think of Joe Fairless. He was building his business, getting all these people, and he kept that piece till the very end because that was what he was good at. I've talked to other investors who said, look, I'm terrible at this. I'm just going to say it. I can't close anything. So I'm going to get rid of that piece, but I'm a good CEO or I'm a good this. But knowing your strengths and your weaknesses, I think too, you got to get brutally honest with yourself sometimes to move forward. So you just knew then the CFO position was the right one for you. And you answered my next question, though. You did not have any special training or background. You did this through, I like to think of, I tell people all the time, you should try different strategies, different things. And I really believe in the end, an investing strategy will choose you. You might do a lot of them, but one will speak to you. And I think that's the same way probably with your CFO position. You try them out and you go, it's kind of like shoes. These are okay. These are okay. Wow, I love these. And that I'm the CFO. So how did that kind of work that way for you?
So the continuation of my story is I moved from that investment company, moved across the country because we could. I sold my properties, like live wherever, move closer to family. So we lived in Virginia and I started working with another investor there. The first thing I did was like, I got to see your numbers. I want to know the data, and the data was a mess. So we went in, cleaned it up right away. And right away I was able to uncover that he was super under leveraged on his properties. And I said, are you comfortable with this? Or like, did you know you had a lot of money tied up here? And he was like, no, I had no idea. And like, no, I'd like to leverage it to at least maybe 50% or 60%, and still a lower loan to value ratio. And so he was able to pull money out, and he said, this has been transformational because I know my numbers, I'm in control now, and I just got to take a whole bunch of cash, which I now know where it was going, like where the bottleneck of the cash was. So that to me was a light bulb moment once he said that, of I know the real estate investing language, and I know the finances of basic financial management. And I want to bring that to the real estate world because I feel like that is the key to not having a crash like 2007 and 8, even while all this stuff is going on around you. You might be able to weather that storm if you just had this basic financial management. So that's what sparked Simple CFO, because I'll be honest with you too, Sharon, I'm not even a lover of the CFO position myself. I like building a team. I like building a team of smarter people that can help and can really put that in place. So I'm really good at, and like, if you're my strength, then is being able to build that team and being able to bring those people together. And I was like, I can bring together a team to help a lot more investors than just one at a time. Like, I can do this to bring this and to propagate, like, you don't have to live deal to deal. Like, if you just have some basic financial management, you don't have to go down in 2007 and 8 like one of my best friends did, and like lost a bunch of his properties. And there was a lot of things like that I wanted to save investors from. So that's what started it and sparked, like, even why I got into this Simple CFO, into the fractional CFO business. And at that same time too, I had a great mentor that I called and was like, what do you think about this idea? He's like, I think it's great, think it's needed, like, this is going to blow up, I think it's going to be a really good idea. He said, another key thing he said though, have you read Profit First? I said, no, what's that? So he's like, just read it, trust me. So I downloaded it that night, took 10 pages of notes, and said, this is the framework. This is the framework for managing the cash that I want to help investors with. So that's kind of the journey from just full-time real estate investing to more passive there, and then building the CFO business and the Profit First message.
I think you hit upon two things there. And I was going to ask you kind of about an org chart, but you said, so you're really good at the CFO position, and that is critical for any business. So you do that because you're good at it, and it's necessary. And that's obviously a skill that you have, but building a team is your passion. And I think so many of us find ourselves at that crossroads.
Yeah.
You're really good at this and it's necessary, and so you do it. But over here is, man, that's where I find my joy. And that is such, it's a blessing really to be able to get that clear on those things.
It really is, because once you find what you're passionate about too, like, I love building the business. I don't necessarily like the day-to-day grind, like those types of things, but I like, my grind is finding those right people to put in there and to say, here we go. Like, we're going to change the world, to get the real estate investing world and bring that, and like have people stop living deal to deal. So I absolutely love that. And that's where I feel like that helps me grow as a person. Like, as a CEO, you have to know all the different areas of the business, be able to find the right people for those areas, and then be able to execute as well, to execute well with that. And that's been fun to me. I want to recommend one book on here. It's A CEO Only Does Three Things by Trey Taylor. It's an incredible book if you're moving more towards the CEO role, because it's all about culture, people, and numbers. Every single day, that's the framework that I think about now. How am I influencing the culture in my business? Do we have the right people? Do I need to be looking for someone? Are my people being treated well right now? And then how are the numbers? Let me analyze the data. Let me analyze my numbers, make sure that we're on track to hit the goals and hit where we need to go to.
That is so important. And I'll be sure to put a link to that book, and I'll be hitting the order button on that book too. So you and I we should do a training on team building. I'm just going to put that out there.
Okay. I would love to
get through your book launch. We'll do that,
Very
David.
passionate about that.
Yeah. So that is, I know that's a definite problem for most real estate investors. They may even hire like a VA or something, and then, okay, I'm done.
Right.
But yeah,
no knock against VAs. I've been working with one VA for 7 years. He's the best worker I've ever worked with. Yeah. But you need to, at some point, be able to hire the best, and not just doers. Now I'm hiring thinkers for the positions of those people that don't bring me every problem. They're solving the problems. And then if there's anything big, then we can discuss that together.
Yeah, I love my VA. So I have one that does what I call a little bit lower tasks. Because she's been with me through. She's had two children since she started, so 7, 8 years, and then I've got a higher level VA that is incredible, and I love her
Awesome.
because I can go here, Carol. Here you go. I don't have
Yes.
to. She's got skills and software skills, and she knows the technology. And it's like, oh my gosh, they say, but you could get somebody cheaper. Nope, nope. I'm not looking
Nope.
for cheaper. I'm looking
Exactly.
for somebody that, like you said, that can grow. So let's talk about the book. So
Okay.
obviously you are very passionate about this topic, and it's something that I talk about. If you go back and look at my podcast, I always bring it up. It just drives me crazy that people are so financially illiterate, and it's not their fault. It's not their fault.
Right.
And that's why this book, you can bet I'll be telling people about your book. But in the original Profit First book, one of the chapters talks about, and I'll read this: your business is an out of control cash eating monster. And you and I touched on this a little bit. So in your book, do you address this for real estate investors?
Oh yeah, I think it's chapter one, why we're living deal to deal.
Oh,
Like
there you
that's
go.
that's chapter one's title. So that is definitely something that I cover inside of the book and I saw it. I've seen it firsthand a couple times. So where we're doing so many deals, feeling like we should be on top of the world and we're still not making money. And that can happen at 25 deals a month or
Yeah.
one deal a month. Like
Mhm.
it doesn't matter where you are. Like if we don't have some basic just financial management, cash flow, know-how, like just some basic stuff, it can get that way. So yes, it's definitely addressed in the book.
So tell me a little bit about the book. If people pick up your book, I want to. Normally, I would be a little bit more educated about it, and I would have a copy sitting here. But we did this a little bit ahead of the curve. There, that your book is out now, available for order.
Yeah.
But let's talk about the book and what can people expect from your book.
So what they can expect is I do talk about the fundamentals of profit first, of
Mhm.
first the mindset. Let me just break it down, then I'll tell
Yep.
you what's specific to real estate investing.
Go
So
ahead.
the mindset. So we love our formulas as real estate investors. So the broken formula is sales minus expenses equals profit, meaning I take a sale, I pay everyone else and their mother, and then whatever's left over, I get to keep,
Right.
hopefully at the end of the year, if there's anything. So that's where we're always looking for that payday, that someday event that hopefully we get this payout. But the profit first formula is sales minus profit equals expenses, meaning I make a sale, I take my profit first, and then the business has to pay the expenses with what's left over, which sounds great. And it sounds like, yes, we need to do this. So I break down how we can do this in the book. But the other thing I'd want to talk about there is I feel like we've heard that a lot of places, like Rich Dad Poor Dad, pay yourself
Mhm.
first, or the richest man in Babylon, a portion of all I have is mine to keep.
Yeah.
Like we've heard that message. What I like about profit first is that it's got a second portion of here's how you do that. How do you manage the money so you can actually take profit first, even if you're unprofitable right now? If you've never done a deal, if you've done 1,000 deals, it doesn't matter. Here's how from the next deal you can be profitable and we can get into a better habit. That's what this system is about, making profit a habit, not some nebulous one-day event off in the future that we're hoping that comes around someday. So that's the mindset around profit first. So, but I won't go into like nitty gritty, all the steps, but I'm going to go into one major step that this step can save your business from ever going bankrupt or like not having the money or not knowing where the cash is. It is if you've ever heard of the envelope system, which is like Dave Ramsey's made that popular, or you might do this with your personal finances, put different expense, buckets in, and cash inside of envelopes. Same thing for profit first. It's setting up physical bank accounts and naming them and putting money and transferring money into those accounts, which everyone always asks, so what are those accounts? And the fundamental accounts to open up, I put my spin on it inside of the real estate investing book. I call them the golden trio, because I'm a huge movie person, nerd, geek, whatever you want to say. I mean, come on and look at me. I get it. So I watch like Star Wars, Harry Potter, like those ones that have 3 epic heroes, always moving the story forward for good. Luke, Han, Leia, making sure the, light side of the force wins in the end, that good wins. And so in your business is your epic story. It's your epic saga that you're living out. currently right now. This is going to be your legacy. This is going to be, and you need to make sure that you are always having 3 main Golden Trio heroes pushing your story forward for good. And so what are these 3 accounts that always make sure you're winning? Number 1, a profit account. Number 2, an owner's compensation account. And number 3, an owner's tax account. So what are those accounts for? Because everyone always asks profit and owner's comp. Profit is for the reward of starting the business. It's for the risk. It's for the late nights. It's for working 80 hours a week. It's like for those things to make sure you feel like you're being rewarded as a business owner. And then you take that draw on a quarterly basis to make sure it's an incentive enough to keep going when the chips are down. Then number 2, that owner's compensation is how you pay yourself. How you pay yourself first. It's this salary or draws or distributions that you make on a regular basis for working in your business. So if it's just you by yourself, that might be a high percentage to that account because you need to make sure you're eating, and that way you can get in the habit of paying yourself consistently for the work that you do. So that's like probably every week or every other week you'd be paying yourself. Then the owner's tax is so you don't have to come to tax time and be like, where the heck is all the money? Or like, they just told me I owe $60,000 and where do I get that money from? And I got to do 3 more deals, or I got to borrow, or I got to, push off tax time until October, or like whenever I could file my extension. So that's to save for your taxes throughout the deal. So that way you have the money there. Then there's the income account, which is one account. I call it the control account, where income comes in, deposits come in, then you decide to push out the money from there. Instead of having one big pot where all your money goes in and it's just like money goes in, money goes out. One day you're a millionaire, next day you can't rub 2 pennies together in that account. So instead of having that one account where everything goes in and out of and you feel out of control, have an income account where all income comes in and then you push it out to those other accounts by a certain percentage that we can talk about later if we want to, like how you figure those out, but percentages to those accounts. And then you have an OPEX account or operational expense account to pay the actual expenses. So
that was my question.
The crux. Yeah, that's the crux. Those are the 5 main accounts. It's the Golden Trio: profit, owner's comp, owner's tax, the income or the control account, and then the OPEX account, which is paying your expenses from. Those are the fundamental accounts. And the biggest objection I always get is like, 5 bank accounts? Are you kidding me? This is going to take you the most time to set up and the most time in this system. It won't be anything after this. Just setting up those accounts will probably take you the most time. But I always tell people, if you don't want to set up 5, okay, set up 1. Call it profit and transfer 1% of all income. The point of this system is to make profit a habit, not to get caught up in the little nitty-gritty details. It's to make sure you now have a system to manage your cash and to make sure you are becoming profitable on a deal by deal basis instead of just some nebulous, like I said, some nebulous event someday in the future.
Yeah, this is such a differentiation here on just where your money comes from. So you have a profit account, so you get a salary or a draw or whatever, but you also get the profit over here. And I do want to talk about the percentages you recommend, because people, I can hear them now, they're going, okay, I'm barely scraping by. How am I going to do this? So what are those percentages? And I'm sure as you make more profit, more money, as those things grow, your percentages can change. Or if you have a disaster, maybe they change in that way. So let's talk about percentages.
So a lot of people ask this, and in the book, either in Mike's book or in my book, if you're wanting real estate percentages, I give targets to shoot for, but those are targets. At the beginning, you need to know where you are and what you need right now, meaning what do you need to pay yourself, like in the owner's compensation bucket, and what do you need in order for the business right now? Like, what have you built for yourself? Let's just say you've done a couple deals, you know your expenses, you can get, okay, this is how much I've made in the last 12 months. This is how much I've kept. Is this enough? And going off of, okay, if I made 100,000, I took 20,000, that's 20%. Is that really enough? Like, if you're going to do that again, like, is that enough to pay yourself? So getting where you are currently, those are called current allocation percentages, which those are going to vary wildly across every individual person because of where they are, where their business is and whatnot. But getting those first percentages, what can you do right now? Even if that means 97%. to OPEX just because you've built a top heavy overhead business, it's going to at least show you like, oh my word, I'm pretty upside down if I can only do 1% to the other accounts. So that's where getting where you are currently. Then the targets, depending, like you said, Sharon, depending on the size of your business, those change depending on, your business. But I can do at least the targets for, if you're just starting out, it's 5% to profitability, 50% to owner's compensation, 15% to the tax account, and then 30% to the OPEX, the operational expense account. Those are the targets to shoot for if you can get there, because when you're first starting out, you probably don't have much overhead. It is you. So making sure you are supported, and that's the targets to shoot for right at the beginning. But I would never recommend going towards those targets or doing those targets unless you know you can sustain it, because a lot of people are like, they're at 97%, OPEX, it's going to be hard to go from 97 to 30, overnight. So it's like, you got to make sure it works for you. But the whole goal of the system is to make sure you're actually just separating out that money. And another big thing too, with those are for your percentages for the cash that's flowing through your business, that's that income into those different buckets. I have some other real estate investing specific things, but that's the crux of the percentages and how to figure those out.
So that gives people, though, I'm a very visual person, and that gives people an idea. You could take a piece of paper, you could take a whiteboard, you can put those buckets out, and maybe it is only a tiny amount you put into the profit bucket. Don't you think part of it's a habit? It's like saving money.
It is all about that. It's all about getting into that habit, because if you can start now, think about it. If you're just starting in real estate and you start off with your first deal, think about when you're doing 10 deals, if you're doing this system. So instead of doing like $100 to profit, you might be doing 10,000 to profit in a month, or like down the road. So you need to be thinking wherever you are. Let's say you're doing 100 deals a month right now. Like, even if you do it from this next deal, you'll start seeing the fruits of this system. That's where I can't say that enough. I interviewed someone on our podcast once, and he said, if I would have started this system day one, I'd have $5 million more in my account right now, cash. Because right, because of this system, because of how much he had grown, and now that he was implementing profit first for several years, like, he saw the fruit of the system of building that habit. And he's like, I did that calculation one time, and it was pretty gruesome. But that's where you need to make sure, wherever you are right now, 1,000 deals done or 0 deals done, and your first deal you're working on, get this system in place, get that habit. Like Sharon mentioned, it's all about that habit.
Well, David, you could get ahead of me on my questions, and you just nail my questions anyway. So that is, I was going to say where to start. That, folks, is where to start. 2 things. Get David's book. That's number one. And then start to implement this. This gives people a very actionable place to start. And that's what I love. I love about what you've talked about, because it's not a bunch of theory. It's like, okay, here are the steps. Here's what you do. And I'm excited for people to get your book, because it will change their life. And I know that from talking to you. You're a very visual thinker too, aren't you?
Yes, I am very visual. So
it's all that movie stuff.
Right, exactly. It's all the movie stuff. It's the big stories and whatnot. So yeah, very visual. Well,
this has been one of the most fun shows I've ever done. What advice do you have for people, aside from what we've talked about? Set up your buckets, get the book. What else can you tell them to encourage them?
So I'll give you one other practical step as a real estate investor. If you're going to be doing flipping or any types of projects, set up one more account and call it OPM, other people's money. Don't mix your private lenders, hard money lenders, bank institutional financing with your cash that you use to run the actual day-to-day operations. Use it for the projects. Don't get yourself in a Ponzi scheme like a lot of people do, a mini Ponzi scheme that they build. So that's one actionable advice. And then I would also want to say too, another advice, reserves. Reserves help grow your business. That is almost counterintuitive to a real estate investor who wants their money out there working for them. But in the book, I dedicate an entire chapter to this and the benefits of having reserves and what it does for you, the real estate investor. One of the biggest things is, freeing up your mind space. You don't have to live deal to deal if you have those reserves. You don't have to take that next deal that's slim and the margins. And I think, like you were saying, Sharon, can I make the numbers work? Can I do some of this magic stuff here? And it helps you to come from a place of making decisions from your purpose and not from fear. So helping get that reserve in place so that way you're doing that. And so those would be some big ones. The last piece of advice: open one bank account, call it profit, transfer 1%, start getting in that habit. That's what I would want to leave you with.
That is awesome advice. And you hit upon a point where I think so many investors find themselves there. They need a deal.
Yeah.
When you need a deal, then you almost always do something stupid.
Yes, indeed. Yes, indeed.
Yeah. And we know this because we know this.
Because we've been there. Exactly.
Well, thanks again for coming on the show, David. This has been a great show. And what's the best way for folks to get in touch with you?
Sure. So if you want to order the book, it's on simplecfobook.com. That's where you could go. It's also on Amazon, but that takes you to, our site there, and where you can buy in bulk. And people are asking about bulk and discounts all the time. We can give better discounts there than Amazon. Then also simplecfosolutions.com is our fractional CFO service. That's where we host our podcast too and other things. So if you're looking to get help implementing, we do that as well.
David is just a valuable asset, folks. You better take advantage of him. So thanks again, David. And thanks to all the listeners for coming out today. And if you like this show, and I know you did, please share it and leave us a rating and a review over on iTunes. It really does help people to find us, and I would appreciate it. So that's it for today. And I will see you same time, same place next week. Bye for now. Thanks, David.
Thank you.